Bloomberg Audio Studios. Podcasts, radio, news.
It looks increasingly like there's not going to be a US-EU trade deal, and we've got Ollie Crook sitting down with a few CEOs who would very much like to see some carve-outs.
Absolutely. Germany's been moving in that direction. Germany's been hoping that it's going to get carve-outs, particularly for the car sector, particularly for the industrial sector. That is looking like it is going to be harder and harder to achieve. So A, how do you prepare for that? And B, how do you invest in Germany to take advantage of the current government largesse that appears to be emanating from Berlin? There's two people that we should be asking. So let's hand things over to Ollie Crook.
Yeah, that's right, Guy. I mean, we know we've been talking about it for years. The German economy has been effectively flatlining for a number of years. With the new Chancellor, Friedrich Merz, he's made it the central promise to turn that economy around. The first step was by amending the German constitution to change the so-called debt brake, freeing the government to unleash potentially more than €1 trillion in debt financing. Now the question is, how do you spend that money? How do you attract the private money? And critically, what reforms are needed structurally within Germany? So it's not just a sugar high, but a meaningful reordering of the economy. Here to help answer those questions are the leaders of two of Germany's most important institutions. We have Siemens with its deep heritage in the German industrial base, now leading the way in bringing the industrial and the digital worlds together. And of course, Deutsche Bank, the biggest lender to Europe's biggest economy, an institution whose capital flows through both the national champions and the countless SMEs that compose the Mittelstand. Christian Zaving, Roland Busch, thank you so much for joining us on Bloomberg today. You're meeting with the Chancellor a little bit later at the behest of, well, really you guys, having founded this initiative of Made in Germany. We now have pledges of upwards of 600 billion euros worth of investment. What do you hope that Made in Germany can deliver?
Well, thanks. First of all, thank you for the invitation. Look, I think we all strive for the same goal, which is to finally have growth and competitiveness back in Germany and in Europe. And I do believe, and we do believe, if growth is coming back to Germany, it's also good for Europe. And in this regard, growth cannot only be debt financed by the government, cannot only be stimulated by the government. Actually, we need the economy. And therefore, a small group around Roland and myself and others, within a couple of months after, in my view, a solid start of the government, actually said we also want to step up. We want to show what potential Germany has. And therefore, we founded this initiative. And I think it's quite impressive what we have collected after a couple of months with over 600 billion of investments, 61 companies. And to be honest, I think more to come over the next months. But it shows what the sentiment is and that we have a chance.
And so I'd like to get an idea sort of more concretely, because we're sort of in the age of large pledges to government and spending in local economies. So I'd like to get an idea from Siemens, for example, how much of that money is coming from Siemens, and specifically, what are you targeting those investments into?
Well, so, I mean, this goes much beyond Siemens. No?
Yeah.
These are more than 631 billion euros, which we are talking about. And it's a combination of, as you said, 61 companies, it's corporations, it's financial institutions, but it's also small and medium-sized enterprises and startups. So it's a combination. They're all geared for deploying capital into a country where we believe in its innovation strength. We have small and medium-sized companies, hidden champions. They are unique in their technology. And we believe that with the people which we have, we can drive this to the next level. Yet you need a little bit of structural changes in order to really attract the capital. We all know that. They've identified 9 action fields, and they are almost completely in sync what's written in the coalition contract. And in coming to Siemens, I mean, we're investing in manufacturing innovation. In Erlangen, for example, we want to invest in what we call the industrial metaverse kind of manufacturing, driving digitalization to the next level. We are about to deploy that capital as we speak. The same is what happens here in Berlin. It's a completely new precinct in Berlin. We're investing, leveraging also other financial investors' capital. It's a fully digitalized city, living, working, and manufacturing at the same time. Capital will be deployed as we speak, and so on. But we have more than that. We have more than 50 lighthouse projects from all the companies where they say, these are my ideas, this is what I use the capital for.
And so let's sort of zoom out and see, kind of looking into the future 5-10 years from now, Christian, when we're trying to imagine if this initiative is successful and the initiative of the government, what the German economy looks like, how different it might be from the sort of traditional ideas that we have about the German economy, which is a lot of smokestacks, a lot of heavy industry, very energy dependent. What do we look like in this this, what does the economy look like in 5 to 10 years?
Well, always hard to exactly zoom out and says what it looks like in 5 to 10 years, but you know, sometimes history tells you what is possible. If you think about how the German economy actually changed over the last 30 or 40 years. When I started in banking, in the area or in the location where I started, this was an industry, or this was a location which was dominated by textile and the printing industry. It completely changed. And if I think about family-owned companies, if I think about Siemens, if I think about others, how they now actually apply artificial intelligence for industrial processes, I think Germany can be and must be a technology-led country. If I think about sustainability, technology with regard to sustainability, we haven't talked about sustainability so much over the last 12 months. Well, this is a key topic. Germany has the leading technology to actually master that challenge, to export that. I do believe, by the way, that Germany will always be an export country. And then with leading technologies, we can master that. For that, you need investments. For that, you need to up to date. And therefore, it is so important that we actually invest into our capabilities. Third point could be defense. I'm actually glad that we are upsizing our defense, not only in order to defend our own continent, but moreover that most of the defense investments will actually doing very well for future technologies. So you can actually initiate a new industry with defense investments. So I think we will see a further development of the German industry, but I do believe that technology, artificial intelligence, but also sustainability will be something where German industries will be leading in 5 to 10 years.
And Roland, you are sort of coming from this company that has this heritage in extreme heavy industry. It is now transitioned to do exactly sort of what you're describing there. So how do you appraise the kind of Germany's structural advantages in order to sort of take advantage of what we're talking about here?
So let's take the AI technology as one of those fundamental technologies which are fundamentally changing actually everything. We talk about industrial AI. So what you do need is data. I mean, better data beat better algorithms. So we are sitting on a massive amount of data. This is one of the most industrialized economies in the world. And again, small and medium-sized enterprises, large ones, they're creating data from their buildings, their manufacturing sites, their engineering. So this is number one. And we can leverage that data and bring it into what we call industrial foundation models, which are not hallucinating. They are really working on the shop floor, agents which act on your behalf, doing things on the shop floor, managing actually lines or even whole plants. Together with people trained on AI technology. That does not go without people. We need people who use these technologies. And the combination of this innovation strengths, domain know-how, but also the data we have available, that can help us a bit. The only point here is we need less regulation to release the power and the speed with which this technology can really hit the market. So there are a couple of things which we have to change. I'm constantly saying that, but the potential is there.
Well, while we're on the subject, I'll stay with you because this is my next question is the roadmap to getting there, right? We've laid out the ambition, now the roadmap to getting there. Specifically, what have you been encouraged by what you've heard from this government, and what, sort of what reforms concretely would you like to see in the next 6 months?
So we have 9 action fields, and again, they are in sync with what the government is planning to do anyhow. And just to spell out some, number one is coming back to innovations, the way how we are supporting innovation, universities, schools, education system. The other one is the labor market. We need the best talents in the market. We need to deploy the working forces which we have. We have to bring people who are coming to us into work. Another one is the investment climate, that you have incentives for investing and deploying money, and we see some first actions already taken by the government. We talk about less regulations, faster decision processes. It doesn't help if it takes 5 years to get an approval for a plant, then you want to deploy capital in the next 3 years. And the other one is digitalization. You have to digitalize the companies, but also government processes, because you can be much, much faster and much more productive in doing so. So just to line out some of those areas, it's not, we know what to do. It's about doing doing actions.
But Christian, we've heard about cutting red tape in Germany for how many decades now, right? This is something that we keep hearing about from the government. What do you think, again, like concretely, what would you like to see from this government? You speak to, every basically business within Germany. What are the sort of 3 things that, you could really concretely put into place in the next 6 months, which would encourage these companies and give them the confidence to invest?
Well, the 3 main complaints of the people, and in particular of family-owned companies, but also larger companies, clearly regulation and bureaucracy, and their speed. And this is an issue where it's not only Germany, we also have to have a far bigger influence on what is happening in Europe. And therefore, I also think more leadership, a stronger government in Germany will also help to do structural changes in Europe, which we need. Number 2, energy prices. It's still an issue. Now, I think the government is going into the right direction, but this is something which we clearly need to have in mind. Number 3 is the labor market, and flexibility around the labor market. This is kind of the feedback we get from our clients. Now, I think there is a 4th one. As I said, the government had a good start. We need to focus on our pension plans, because I do believe it's not only important that we have a secured system for our people, for the retirement people, also in 10, 15 years' time. I think it's actually the key to success for investments. If we have a capital-based pension plan, that also means that more investments will go into our economy. It's nothing else than the real start of a domestic capital market. That's what we need. If we can focus on that, I think even more foreign investments will run into Germany.
So you've touched a number of points. I want to pick up on a couple of them. But a little bit earlier you said you think that Germany will remain an export economy at a time when we're seeing that sort of concept really being challenged at the global scale by the United States. I'd like to get an idea from you personally, but also the clients you speak to. How are they weighing the optimism that comes with what we're heard from the German government with the risks that we're hearing from the United States? And is it, what is winning in terms of making decisions for businesses?
Well, I think it's all about diversification. I think we learned through COVID already the first steps of what it means to be diversified, not only to diversify your production and supply chains, but also your, so to say, sales market. So I think a lot of companies are actually looking into diversification, more agreements, more bilateral relationships. But I hear nobody actually talking about let's only focus on the German market, because we know that's too small. Second point is actually that we all need to focus more on Europe. We need a stronger European home market. The stronger this market is, with 450 million consumers, the better it is also for our negotiations versus the US, versus other countries. And therefore, I do believe the stronger you make yourself, and again, this initiative is prone to that, the better your starting position is. But I do believe that most of the companies are not trending away from globalization. They are simply saying, how can we diversify and making sure that we are not too dependent from one or the other country.
And Roland, I mean, the rest of the world may not be, but the United States certainly is. We're going to get tariffs from at least 10 to 30% in the next 2 weeks. How are you sort of appraising that risk and how it could sort of affect the plans here within Germany?
So what is the eventual outcome? Let's put it that way. We will end up in higher tariffs vis-a-vis the United States.
Yeah.
What we don't really want, actually we wanted to have lower ones because we believe in free trade. This stimulates economies and growth. So that would drive inflation to some point. However, there's one point which is super relevant, is we have to stop this uncertainty. So once there's a deal, the deal should be the deal. And then we can deploy capital again based on facts, how the tariffs look like. And hopefully that they are not going too high into extremes, because that would harm economies. And secondly, it's super important. If we finally manage to make free trade agreements in a couple of years and not decades, that's super relevant. Because what would you do if you have two large economies which you're depending on? Diversify in other ones. ASEAN is a super important region, growing region. Middle East, we have South America. So there's so many regions where we can create other markets on top. And I'm not saying that United States is not a relevant market for us, and it's still the most relevant market. But still, there are opportunities, and then we are ending up in a much more resilient and better system.
Yeah, and so talking about some of the investments that you, Roland, have made in the United States over the last year or two, basically $15 billion worth of deals in kind of AI-based and digital businesses within the United States. I'd like to get an idea, did you not see those kinds of opportunities within Europe? Is that something that you could see happening with Europe, or are the companies just not there?
No, the investment you're talking about are two investments, a 10 billion investment in Altair, simulation software, 5 billion, also in software for simulating molecules. It's about the pharmaceutical and biochemical market. And I have to say that if you look for software assets, indeed, you will end up in the United States, mainly. There are alternatives. We also invested in European companies, smaller though. But we are not hesitating to invest capital, R&D, but also M&A in Europe. We're looking into companies there as well, hardware companies with domain know-how, hardware which creates data. So, but in that case, if you really look for software, and Siemens invested really quite a bit, 25 billion over the last 14, 15 years. In software, most of that comes from the United States.
And we've been talking, Christian, a lot about European champions and changing the way that we think about preserving companies at the national level versus the European level. And I want to understand sort of your, when you look at Deutsche Bank, which is now at the end of what was a very long turnaround process, but now is feeling like it's in a strong and confident position. Is this a moment for Deutsche Bank to get into a much more sort of aggressive mode in terms of expansion mode, potentially looking at M&A across borders? What do you want Deutsche Bank's role to be in the kind of world of European champions?
Well, I do think what we see in this world is with all the geopolitical uncertainties, with all the also economic uncertainties, there is one trend which is the same across the world, that our clients want to have a European alternative to the US banks. We have very strong US banks, very capable US banks, but in this world of geopolitical uncertainties, they want to have a capable global European player. And there are not so many European banks left with a full investment bank, with a full corporate bank, with a global network in over 60 countries. That's the role we can play. Now, this role we not only want to play because we feel ourselves as a global bank, but it's obviously much easier to do that if you are coming from a country which is economically increasing, which is economically on the right path, and which is also pulling now Europe. And therefore, I think we have a unique chance, not only as Germany and Europe, but also as Deutsche Bank, to actually be the one who is facilitating and who is contributing to our clients' growth around the world. The diversification also in banking, not only to rely on one bank, but on many banks, and that from a regional perspective has never been bigger than now.
And you touched about diversifying, and just another question to you. Is this buy Europe trend, is this a lasting thing? Is this something that you're seeing from investors that you talk to, that they are wanting to make a meaningful commitment to Europe? And what does that actually look like in terms of numbers from where you're sitting?
Well, for the first time, we see, obviously, since the last 3 or 4 months, a quite significant reallocation from funds, in particular into Europe. The interest is huge. Whenever we talk with investors, they really want to understand what's going on in Germany, what's going on in Europe. By the way, already in Davos this year, 6 months ago, most of the investors said, micro, Germany is really good, and with that they mean the German corporates, the German companies. Macro, you need to do improvements. And that's exactly what we want to try now. Of course, the government stepped up with the fiscal program, but also with the reforms. If we now actually do something, so to say, together, if we march in parallel, we have a huge chance. And then I do believe, with further reforms to come, and that is necessary, I do believe that this trend of reallocating funds to Europe will not stop. If we are not doing further reforms and just rely on fiscal debt, that doesn't help. We need the fiscal reforms.
Yeah, and Roland, a sort of final question to you to sort of close things up. You know, Europe does not want to become the United States in a lot of different ways, but we do want here sort of capital markets like the United States. We do want the kind of innovation we have at the United States. From what we've seen from the Trump administration and really the U.S. for the last couple of decades, what do you think Europe can learn and can take from that without sort of sacrificing the parts that are very important here?
And that's a very good point. We have to hold on our values. They brought us where we are, and they are good, and we keep to these values. We really have to make structural reforms in Germany, but also on European level. That requires courage, it requires solution orientation, but also really bold moves. You cannot just take one of the problems which we have in these acts. You cannot take an act which is substantially misconstructed and fine-tune a little bit. So we have to go back and really think about what is it, how can we accelerate the economic development, but also innovation development. And again, it's making bold decisions and make them fast.
Well, gentlemen, thank you so much for your time today. Christian Sewing, Roland Busch, and this commitment that we've got for Made in Germany, more than 600 billion euros being pledged from a dozen of different companies across Germany, and we'll be having a meeting there with these gentlemen and the German Chancellor a little later this afternoon. This is Bloomberg.